This is the briefing for Friday, July 18th. Well, the indices just really seem to be struggling in an effort to try and break out of a rotational pattern that they've been in for several days. They did break out yesterday and today. You can see this is yesterday's trading in the spiders, and this is today's trading in the spiders. This is the Qs on a 60-minute basis, and the Qs have broken out and have been able to hold above this support at 558. But the Russell is really struggling. It came up to about the 225.50 area and then absolutely turned around and sold off. Interestingly enough, I was long the IWM at the open today and was very pleased to see the gap open and the move higher, but it really struggled. And then of course we got this rotation back down through the 225 area. And then the selling just continued. I got out of that trade probably 2 or 3 minutes after the open today, mainly because I didn't see any follow through on a shorter term chart. Now it's going to be interesting. You can see the spiders have broken out. They retested the breakout point, and then appears to be that they're wanting to move higher. The Qs, of course, have broken out and continue to move higher. But this selling tail that came in today was pretty significant, especially in the Russell and the IWM. You can see that at the open, breadth was diverging. You can see this is S&P breadth. This is NASDAQ breadth would be right there. There's a pretty clear indication that this was not a strong open, even though prices opened up with a move higher. And this is Russell breadth right here. So you can see the divergences that occurred in market breadth. Also, net volume was diverging as well. You can see that right through there. You can see that right here and right here. So it was a pretty clear indication that while it was pretty exciting to see the open and see price move higher, that it was not going to be sustainable, not based on what was happening with the market internals. So basically, here we are, still basically in a rotational pattern, and the spiders on a longer term basis. Now, about the 618.70, 618 area is going to be downside support in the spiders, and then below that is going to be the really important 610, 611 area as well. You see, volume fell off slightly today, but 52-week highs minus 52-week lows was fairly strong. So that was probably the only internal measurement that gave the market some type of ability to open up higher than yesterday's high. This is the Qs on an hourly basis. You can see what's happening with breadth here. We had a little bit of a spike yesterday outside of this trend area, but you can see the trend in breadth is down. That was pretty significant, the divergence with a new high over yesterday's high, even though we had this divergence in market breadth. And then, of course, the Russell IWM is really struggling to get out of this, or to hold above this 220 area. Next upside resistance is 230. You can see the same thing's happening with Russell breadth. A little bit of a spike in breadth yesterday and today. So it's going to be interesting to see what happens in Monday's trading. Now, looking at where we are in terms of overbought and oversold, we were approaching overbought in the NYSE, and we were overbought yesterday in the NASDAQ. So we're basically neutral now. So this gives the indices the opportunity to go in either direction. It was very tempting after today's move to short and take a short home overnight. But that would be a gamble, and I just didn't want to do that. So you can see total volume on the NYSE picked up slightly in today's trading, and you can see net volume trading down, net volume much lower. In fact, net volume was negative in today's trading, and the same thing with the NASDAQ. NASDAQ net volume was basically positive, but not greatly so. You can see how it fell. And fell pretty dramatically. So the internals are still not giving us any indication of strengthening. Then the indices are struggling to hold the gains that they've made up to this point in time. Now, the market is potentially still being traded based on news events. I think, and this is just my opinion, that the effect of tariffs are not as much weighing on price development in the indices as it did in the past. Even though we're facing a 30% EU tariff come August 1st. But I think it's been proven, or I think the traders have stepped back and said that the impact of those who suggested that the tariffs are going to be very inflationary, it's just not seen right now anyway. That can change, and we just have to watch and see what happens as the market develops going forward. Have a great weekend, and I'll pick this back up on Monday for subscribers, and hopefully we'll get some good market structure that will give us an opportunity to understand a higher probability of which direction this market is going to go in. But right now it looks very toppy. Have a great weekend.